So welcome to the first panel discussion. And we have the most difficult task to keep you awake after this sumptuous lunch. I do understand. And I'm sure with our both the eminent panelists, we'll try our level best because the topic is very interesting. Insuring Bharat's Heartland, strengthening rural lives and livelihood, with support from Arup Chatterjee, heading Capital Market and Insurance in Asian Development Bank, Manila, and Mr. Sanoj Kumar, who is Executive Director and heading LIC's Western region. So, as the topic says, so we have been discussing how to reach out to people who need insurance the most, whether it's life, general, health, and not only rural lives. Very interestingly put, you can find in every pin code in India or zip code in India a coexistence of India, the digital India, and Bharat. So where we are sitting in this swanky hall of Geo Convention Center representing the digital India, maybe not more than 500 meters from here lies the Bharat Nagar, which is representing the Bharat, the rural Bharat, in terms of the insurance penetration and efficacy. Now, with this challenge in mind, we also have an arduous task to get every life covered, every insurable interest covered by 2047, as asked by none other than our respected Prime Minister Modi ji. And to that regard, we have been discussing, it's a multi-layered problem. Is it an issue of awareness? Is it an issue of reach? And if it is an issue of reach, then the digital means, the way of doing things, making things easier, how effective these are to take the insurance to the rural lives and livelihood. At the same time, is the problem more structural? Is it something, the variable livelihoods, the income variability, the climate risk, the raising temperature level with a depleting water table, all these have some way or other making the complex very layered. And the challenge for the actuary or the insurer or the budding actuaries out here, more complex and layered. And in that regard, I will start with Sanoj ji with you. With your 35 years of reached experience covering a kind of an hinterland to the kind of a city like Mumbai, how important it is from the developmental goal perspective, and where do we stand from the infrastructural support perspective in covering the rural hinterland or the Bharat as we call, and how is our preparedness for our 2047 goal?
Thank you. Thank you, Arindam ji. I think I must thank all the organizers here for having brought out this very relevant and contextual topic today. And my distinguished co-panelist, Arup ji, is also here. I think I'll start with a very common or a very popular statement of Mahatma Gandhi ji. That the soul of India lies in its villages. And I think that is still relevant. Even now, if we say that almost 65% of the population remains in the villages only. Yeah. And almost, I think, 45% of employment is generated in agriculture and allied sectors, and contributing to not less than 15% of our annual GDP. So I think we cannot afford to ignore this very segment. Secondly, if we are moving and we are working as a nation, working very tirelessly towards the achievement of the goal of Viksit Bharat by the turn of maybe 100 years of our independence, when we celebrate 100th year of our independence, and we want that India emerge as a powerful, developed country and all-inclusive economy. And that way, I think, again, we cannot afford this very segment that is rural India. I think when the insurance industry is progressing itself towards a goal of insurance for all by 2047, that is in itself maybe a very humble contribution to the goal of Viksit Bharat that we are looking forward to. As far as you were mentioning about the next point, whether we have adequate infrastructure, whether the landscape is prepared, I think we have come a very long way. Indian insurance industry is, I think, matured now. Almost 25 years of liberalization that we have seen. So many players, all life side, or general side, health side, as well as we have got reinsurers. So many are there. But again, when we look to the overall scenario, have we been able to access the rural population or the remotest part of the country? I think there are still challenges. And definitely, with our panel, I would be discussing about the various challenges also, whether and how can we overcome that, so that we can really make India a powerful country, Viksit Bharat on the by 2047. And I think infrastructure-wise, we are poised to go towards that direction. Even the government side, our digital public infrastructure is ready. I think when we talk of JAM Trinity, like Jandan, Aadhaar, mobile, UPI systems, it has reached the remotest places. So I think we are all set, we are all prepared to give it a thrust, to give it a direction so that our rural population can also go ahead. On the other hand, the challenges of reaching out to the people, to the remotest areas. I think the insurance industry has done very well by reaching out, by having its representation in more than 90% of the districts of the country. So I think that augurs very well for the insurance industry. Not only that, I think more than 30 lakh of intermediaries are there. And we see a wide spectrum of intermediaries all across the country. There are corporate agents, brokers, and even individual agents are there. We have taken help of self-help groups. And I think we are looking for a way forward so as to reach to the remotest people, to the rural areas specifically, so that we can go ahead. And this theme, the topic is very much relevant, very much contextual for the day, because this is one area. If we reach out to all, under the theme of insurance for all by 2047, we shall definitely be able to make a headway and contribute towards nation's growth and economy. Thank you. I think we can go ahead with the next. Thank you.
No, I mean, thank you, Sanoj. I think the way you covered the digital India, the foundation being laid with the digital ecosystem in place and the role of intermediaries, how they are intermingling and creating for the next leaf. Now I will come to Arupda, and of course, your rich experience as a policymaker and also the risk manager. So from that standpoint, how do you perceive the risk horizon in Indian heartland, that is Bharat? And as you have rightly mentioned, that how do you plan to mitigate the long tail part of the risk from this classified like your mortality or morbidity or your longevity, I mean, the different layer of risk, and how, given that now this correlation between different segments of risk are even getting closer, and how fundamentally different India is compared to your other country experience. So over to you, Arindam.
Good afternoon, and thank you, Arindam. Since this is an actuarial conference, I could not resist myself in terms of the risk. This session, which was supposed to happen before lunch, is now happening after lunch. So it has already suffered a timing risk or a longevity risk. There has been a short liquidity risk because the length of the session has been reduced to some extent. And the organizers now also face a post-parendial concentration risk because most sessions will happen in the afternoon. So that's more on a lighter note, don't take it seriously. But when you look across Bharat, basically there are 4 risks which are rising in salience, and more importantly, in dependence. So of course there is the mortality risk, the premature death in the earning years. We have the morbidity risk, which is the health shocks with medical inflation embedded, which Dr. Shetty very eloquently explained. We have the catastrophe and climate risks, which is the drought, flood, heat stress, the low frequency, high severity risk, which are fat-tailed in nature, and then the longevity risk, where systemic improvements in survival have led to cohort effects and long-term retirement durations, basically. So what is different today, whether it's in Bharat or even in the rural hinterland, it's not more risk, but more correlation, basically. Risks that once arrived one by one are increasingly arriving together. So to give an example, it is health and heat, income and loss in disaster, credit stress and crop stress. And this is the signature of rising dependence which is happening in a portfolio. So since again we have an actuarial audience, let me try to also explain this as risks become more correlated, the average years would matter less and the worst years would matter more. So we should measure and capitalize for the tail, as Arindam you mentioned, focus on the expected loss in bad years rather than just a percentile, and be explicit about how risks are moving together. That is the difference between pricing in normal times and building solvency for the years when the whole village lines up at the well. So let me elaborate this village metaphor a little bit more. So a village well, we all know, is a triumph of community when one household is thirsty. But when drought comes, the whole village is thirsty, the well becomes a queue, and that queue is not the solution. So the well, of course, is a local risk pool, but it works as an idiosyncratic risk. It cannot carry on with when the covariate risks emerge. And that's again Dr. Shetty mentioned in his Yashaswini example. So when correlation turns local solidarity into local insolvency, that's where insurance can make a difference. And that's where we need to look at risk transfer or insurance solutions beyond the village, beyond pools, to insurers, reinsurers, and the far tail, and explicit rules-based public backstop. And this is where governments need to also understand that the tail risk is something which is emerging as the killer, or a dormant killer, I would say, which they don't know about or they are not aware about. Of course, insurance is not only about statistics, we also need to look at the social dimension of it. And if you look at the social dimension, especially when we are talking of climate, it is not gender neutral. The women and girls are disproportionately affected, and that is where, again, in rural India, we find 71% of the rural households, as per UN Women, aged 15 plus, who are solely responsible for water collection. So which will also turn climate crisis into poverty, and along with poverty, health burden. So therefore, we need to also look at the tailor-made solutions for women and girls who would be in the productive age, basically. And finally, if you look at the 2047 lens, the insurance for all, it cannot be achieved by penetrating the heartland today, because the middle-aged population are tomorrow's elderly. And this elderly population will grow by 20% by 2050. And the 80-plus population will grow by almost 280% from 2022 to 2050 as per the estimate. So we will see a predominance of widowed and dependent, very old women. So if you talk of a poor country, you will see the destitute elderly and the destitute elderly who are primarily women. So we must be designing for the tail and for the time for correlated shocks, as I mentioned, and also for the longevity risk. Thank you.
Thank you, Arupda. In fact, so if I understand from the risk variability and the long tail perspective, somewhere down the line you are proposing the curated product and attacking the issue in a very difficult scenario indeed, but how it can be spread, maybe I will come to Sanoj again. Being an experienced marketeer, see, all said and done, we have the digital infrastructure, we have intermediaries, we have opening up of the market, we have enormous number of kind of an insurance sellers, whether it's a life, general or health. But still, at least in the next, last 6-7 years, if we look at number of people being covered, number of households being covered, the insurance interest being covered, that's not really growing. It is premiumization of the ticket size growing, and that is essentially showing the industry growth. So somewhere down the line, all these effects, whether it's a risk perspective, whether it is a interventions perspective, we're still missing out some of the issues. From your standpoint, how do you like to address this lagging effect, and what is the way forward? Ultimately, we have to reach that ultimate destination of 2047 insurance for all.
Absolutely. And I think your question is very pertinent here. In fact, when we are looking for insurance for all by 2047, it definitely needs to be addressed. And I think when we are looking for penetration in rural areas, then we must also be aware of what are the reasons why we have not been able to reach out to those areas. And what is actually hindering us. I think taking a very general, explanation for that, maybe the awareness in rural areas is still very low, definitely, as compared to our urban counterparts. Maybe even the accessibility to the insurance products, whatever are available. I will definitely deal with what products are available, what are not. But whatever is available, I think accessibility is still very less. I was talking about the intermediaries being present, more than 30 lakh, even individual agents are there. But I think most of them are concentrated in urban areas and maybe metropolitan areas. So I think accessibility is still a question. Third area, again, affordability, whether the products are costly. I'll not tell, in fact, costly. But from the rural perspective, the seasonal income comes into picture. And if if the policy designers can design products in a manner that premiums could be taken in certain seasons when they are having their income. I think from a rural perspective, we need to think of that. Then again, I think one of the very important reasons why we have not been able to penetrate is the trust factor. I think even a single claim which is repudiated, which is not given, especially in the rural areas, I think that spreads like wildfire. Because in rural areas, we know each other very well, in villagers, but they won't understand the reasons why it has been repudiated. But yes, that counts. I think from the perspective of, again, the policy designers, it's also important now that complicated products, complex products, should now, I think, be modified to some simpler products, in fact, with simple wordings. That, again, is a hindrance. In the rural areas, especially even in urban areas, but predominantly in the rural areas, we need to make it very clear. We need to make the policies in very simple languages so that people can understand that. And again, what I think, in my opinion, the risk assessment matrix of urban areas and the rural areas widely differ. It's not the same. What may be considered as a risk in the rural area may not be a risk in the urban areas. Because I'll just I'll just ask you to visualize a rural area, a village. I just think that farmers are there, some artisans are there, people are dependent on the agriculture, people are dependent upon maybe livestock, maybe fisheries are there. So if you take these things into consideration, maybe heavy rainfall or scant rainfall is affecting them, not the urban areas. Maybe the temperature is affecting them. Maybe even seasonal variations, rainfall coming not in April, but coming in 2 months later, that's going to affect them. So these are the things which should be taken into consideration while preparing and framing policies for these people. I think that's going to help us in a long way. Apart from that, rural areas do have different risks perspectives also. One of the very important things is the loss of livelihood, the seasonal incomes. Again, I think migration issues are there. So taking all these into perspective, we should now be in a position to frame certain different customized or standard policies for these areas. Even I think parametric insurance that we are talking about, that's the need of the hour now. I think these are the things, if we can take care, we can really go a long way ahead.
So very quick adjoiner, maybe I'll request from you. So as you have rightly mentioned, whether we like it or not, one of the most successful scheme till this in country, this Prime Minister Jeevan Jyoti Bima Yojana or PMSBY, or even for that matter in the pension side, Atal Pension Yojana. So do you really think that to make this effective to the poorest of the poor, somewhere down the line, the parametric part of it becoming more dominant over the loss SSC method because of the quickness and the how quickly you can kind of and get down to it. So anything on that regard? Also, the rural-urban divide, very interestingly put, it's very intercorrelated. The person who is living in Yavatmal is actually also a migratory worker staying somewhere around Panvel. So how you manage this migration and how that can be, whether it's a property, life or casualty, anything very quick adjoiner from your side?
I think the government has been very proactive in providing this Pradhan Mantri Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, as well as PM Jan Arogya Yojana, Ayushman Bharat. In fact, our Fasal Bima Yojana is there. So government has been very proactive. And if we go by that, then I think we should not only look at the political will that is there, but also the scale that they have managed. And if that can be a government scheme can be scaled up to that level, I think it's for the industry to reciprocate now. I think we can prepare suitable plans when we look at the industry as a whole. Then maybe we are catering to certain segments of the society which may not be as relevant to the welfare schemes or the PMJJY type of schemes. Somewhere there is a missing middle also, that which are not being covered even by the welfare schemes or even by the insurance industry as a whole. We have to look to some way to subsidize that. Maybe the government may come up with a higher limits for these PMJJY type of schemes. Maybe the industry provides some subsidized policies. So I think something has to be thought about this so that this coverage can be made universal.
Well, and as you have rightly said that government scheme and developmental scheme or there is some aspect of, so we see insurance as a risk protection product, correct? And there is a very interesting side of investment. And while I am saying investment, it is not merely from an individual perspective, it's also from the country perspective. And here we will come to Arupda. From the perspective of, say, insurance product, as well as your pension product, and it's a both side of the risk. I mean, whether it's a mortality vis-a-vis longevity, and how both of these can be counterbalanced. Reason being, we are talking about demographic dividends, very young country. By the time we are progressing to 2030, the proportion of population also crossing 60 would be, and you have already touched upon it, correct? I mean, the widowers and widows and their livelihood. Anything specific you touch upon that, how critical it is from the financial prudence perspective, and what is your take on that?
Well, couple of things. One is, of course, we have to develop insurance and pensions product which are tailored to the risks, basically. And when we talk of pensions, life insurance and all, India's savings rates are high, but the savings is not being intermediated through contractual savings. And as a result of that, the the households and individuals are spending a lot of money for consuming consuming for health-related expenditures, basically, or for other life cycle risks. So if insurance can help in intermediating savings through well-crafted insurance policies, then what we will see actually is that people are able to save more and use it for more productive purposes and also for consumption, which also helps in boosting the economy. If you see from an economist's lens, they have more disposable income, not for saving for unforeseen events, but for spending at present. So that is one. The other is when you have these contractual savings instruments to intermediate the savings through insurance policies, especially life insurance and pensions, it will also help in turn the institutional investors to invest in the capital market for their asset liability management, for their duration management. And when they invest in the capital market, especially through bonds or in infrastructure projects, it helps in investment in resilient infrastructure, be it hard infrastructure or soft infrastructure. And ultimately, the job is to reduce the risk first. And only the risk which cannot be reduced, which is the residual risk, that needs to be transferred. So if you look at the role life insurance companies and pension funds can play, that is where, in the case of investing in infrastructure assets, which will help in reducing the risk, and they can also help in terms of improving the savings that way. The other is in the non-life space, the capital markets also have still not been tested. The reinsurers have their own risk appetite, but when the covariate risk expands beyond their scope, they need to also use international capital markets for issuance of cat bonds and all. So those are also areas which need to be looked into more minutely in terms of a risk layering approach, where the high frequency, low severity events can be taken care of by pools, or basically the idiosyncratic risk. Then the medium severity, medium frequency taken care of by insurance. Then the next layer takes care of the reinsurance, and then beyond that, the cat bonds and all. So we need to look at all the layers and provide solutions across the layers and not for a specific layers. And here I'll just make one comment on parametric insurance. It is a good solution, but then the problem is it addresses a specific layers. When losses happen below the trigger, then there is no payout, and then there is a lot of criticism, and the insurance industry loses face. So those are areas which need to be looked into very minutely, and actuaries with the hindsight of data and risk analytics can help in improving this understanding. Thank you.
So I'll also request a very quick adjoiner from you. Say, as you have rightly mentioned from the capital creation standpoint, while we are saying capital, it is needed to create the digital infrastructure, ways and means to reach out to the people who need insurance in Bharat Heartland. But at the same time, there is an enormous risk capital needed to really cover in terms of the life, health, and also property and casualty cover. Do we have enough pool of risk capital available as of now? And what is the role of, see, if I am saying the regulatory standpoint, while the regulator is absolutely focused, and it should be, in terms of the customer protection and how important it is from the customer interest standpoint, the developmental need of it, the gaining the momentum in creation of internal and external capital, what would be the more effective role expected from a regulator and multilateral bodies like World Bank and ADB, in your view?
Well, the time is coming to a close, so I'll be very brief. We need, of course, there is risk pools which are available, but I think they do not have investment vehicles with appropriate credit rating, where regulators have comfort to allow insurance companies, pension funds to invest. And that's where there is an issue in terms of identifying projects where insurance companies and other institutional investors can invest. Now, multilateral banks can come up with credit enhancement structures so that through say a guarantee or some other vehicle, we can, or through a blended financing mechanism, we can help in enhancing the rating of that vehicle or that pool, and then make it appropriate grade for investment by insurers and reinsurers in appropriate assets. So perhaps that's the role where there has to be dialogue between the insurance regulator, the capital markets regulator, and the multilateral agencies, of course, with the participation of the insurance industry.
Thank you. In fact, just summing up in the last 30 seconds, any final comment from you, Sanoj? Maybe top three in your mind.
Yes. I think now it's time that we should not be seeing insurance as only something to compensate the loss. But
Sure.
I think it's now time that this should help us, especially in the rural segment, as a shock absorption for the economy. Also, I think it should cater to the empowerment of women folk, especially in the rural areas. It should also serve as a security for the farmers. So I think overall, insurance for all by 2047 should not only mean insurance per se, but resilience for all, confidence
Sure.
for all. Thank you.
3 critical points for 2047 roadmap.
Well, from my side, well, of course, there has to be a lot of focus on data, risk-informed decision-making, whether it is by the insurers, the regulators, or the government. That is very, very important. The second thing is we have to also look at sovereign risk financing and sovereign risk transfer. The governments cannot manage the risk on their own. They need to transfer some of the risk away to better manage their fiscal exposure, and the insurance industry is well equipped to play that role. But we need to have the hindsight of data. And the final thing is about designing products which again suit the risk characteristics of the population. And that's where we have to not only look at the design, but also ensuring that we reinforce the trust, we repair the trust, we instill trust by paying claims on time.
Thank you, Arupda, Sanoj. I think, at least for me, it was an extremely enriching session. And I hope audience also gained insight into Insuring Bharat's Heartland and our way forward. Thank you. Thank you, everyone.
Thank you. Thank you so much to all our panel members, to our esteemed moderator. Well, I request all 3 gentlemen to kindly step ahead of the tables for a group photo. And post that, we have a felicitation that will be taking place. As they all 3 come together for a photo op moment, ladies and gentlemen, please join me in thanking all 3 of them. Once that you have taken some beautiful pictures, I request Mr. Arindam Ghosh to please felicitate Mr. Arup Kumar Chatterjee. Ma'am, can we please get the mementos?